Today, I want to take a step back from the usual New Zealand housing chat. At the end of the day, New Zealand's a tiny country, and what really matters is the global picture. Right now, geopolitics is driving everything. Wars in Europe, trade tensions, a US president making moves that might look crazy, but there's a strategy behind it. The US is overstretched. They've got over 800 military bases around the world right now. And now they're spending more on interest for their national debt than they are on the entire defense budget, which is massive. And that's a tipping point for any great power. So we're no longer in a world where US calls all the shots. It's a multipolar world now. America, China, Russia, each looking after their own interests, and that creates lasting volatility. So what does it mean for you? Well, higher oil prices, higher building costs, sticky inflation, and all of that flows straight back into the cost of housing here in New Zealand. So in this episode, I'll unpack what's going on globally, why oil could hit $150 a barrel, why politics now moves markets more than anything else, and what that means for you, for your property, for gold, for shares, even for Bitcoin. And just to be clear, though, this is not financial advice, all right? Everyone's situation is different, so always talk to a qualified financial advisor. What I'm going to do now is give you the bigger picture, and then you can think about how it all fits together. So let's get into it. All right, as I said, I often, I usually talk about the New Zealand housing market, the Reserve Bank, interest rates, what's going on with property. But with everything going on around the world, I think it's a good time to take a step back and just sort of look at that bigger picture, because we are a tiny country with a small population. And what we do here, even when we change regulations, we pass new laws and so on, sometimes it only shifts things a little bit compared to what movements globally can do for us. So let's have a look at what's happening with the global economy, what's happening in geopolitics, and sort of see how that ultimately flows back to New Zealand. So right now, geopolitics is front and center. We've got wars in Europe, there are rising trade tensions, and we've got a US president doing things that on the surface might look crazy, but there's actually strategy behind it, right? He's trying to put America first because, the US is massively overstretched. They've got the 800 military bases around the world. And the key point is actually, though, that their interest, the US interest on their national debt is now higher than their entire defense spending. So in 2024, the US spent about $870 billion on interest alone. The defense budget was about $822 billion. Both massive numbers, of course, but this is something the historian Noel Ferguson has talked about for years. I was actually lucky enough to meet him at a John Malden conference in the States years ago. Very smart guy. He wrote a great book called The Ascent of Money. It tells the story of money and finance throughout history, how it shaped empires, wars, economies, and of course the world we live in today. But Ferguson makes the point that when a great power spends more on interest than on its military, that's when it starts to lose grip, right? It can't keep acting as the world's policeman. And that's exactly what we're seeing now. The US can't do it all anymore. And that's why Trump is pushing with the tariffs. He's trying to reshore manufacturing. He's pulling back from trying to manage every conflict globally. And that's where we start to see how politics now drives markets more than ever before. So I've been following Felix Zulauf for many years now. Felix Zulauf is a Swiss investment manager, very logical, and his views have a habit of playing out. He says what he's talking about is basically what we're noticing, right? That politics is now one of the key drivers of financial markets. In the past, you'd get some geopolitical noise. The market would wobble for a week, and then they'd shrug it off. But today, when Trump announces a big tariff, markets move violently. Stocks drop, the dollar shifts, bond yields spike, just from a single political decision. Now, why? It's because the world isn't the same unipolar system it was for decades. We're shifting to a multipolar order. So the US is still powerful, but China is far stronger than it was 20 years ago, and Russia's are still a major player. And there are flashpoints everywhere. Taiwan, Ukraine, the Middle East. So take Ukraine. Felix Zulov thinks that Russia will probably win, in inverted commas, but not by conquering it outright, but by neutralizing it as a threat. Because if you look at it from Russia's perspective, they just don't want US military bases with, under the NATO banner, sitting right on their border. If you look back through history, it's mostly been the West that's invaded Russia. Napoleon, Hitler, and there are others. So for Russia, the Ukraine is really about pushing NATO back. They don't want NATO troops sitting right on their doorstep. Now, the European Union, they talk big, but they don't actually have much of a military. They're fragmented. There's lots of countries. Each has its own priorities. They've got aging populations. The economies are not doing that great in Europe. So they can impose sanctions, but they can't back it up with real force, and Russia knows it. So now we've got this multipolar world, right? The US, China, Russia, each looking after their own interests, and that creates lasting volatility, not just market hiccups. And here's why that matters to us in New Zealand. Geopolitical tensions flow straight into energy markets. Russia is one of the world's biggest oil and gas producers. When Europe pushes back with sanctions or when supply chains get disrupted, global oil supply tightens up and prices go up. Zulaf reckons oil could hit $150 a barrel in 2 or 3 years' time. We're at about $66 now. So just imagine what that means for the petrol pump in New Zealand. And oil isn't just about filling up your ute either. It's the backbone of everything, right? Shipping, fertilizer, we need to grow food, plastics, and building materials. And pretty much everything in New Zealand moves on the road, right? So when oil goes up, the cost of everything goes up. Timber, steel, concrete, even the cost of getting a digger on site. And while everyone wants to believe wind and solar can save the day, they just can't provide the steady, reliable baseload power the world needs right now. I mean, if you look at Spain recently, it's one of the problems. When they had that massive power outage, renewables just couldn't keep up with demand. So until there's a proper alternative, the world still needs oil and gas, like it or not. They're the only thing that really reliably keeps the lights on for now. So how does all of this flow through to us in New Zealand, and how does it affect property? Well, energy costs mean higher building costs, more expensive windows, insulation, cladding. Everything costs more to produce and transport when oil prices are higher. And when it costs more to build, that sets a higher floor under existing house prices. So even if the market softens, the increasing replacement cost acts as a natural buffer. So every time the market moves up, it's actually the new house prices pulling up the existing house prices. And houses are getting more and more expensive to build. We already got rising regulation, increased council fees and development contributions, and then you add on higher oil prices and material costs, and the cost of new homes are they're just gonna keep going up. And people say, how are you going to afford them? I don't know, but affordability's never stopped them going up before. So over the next 12 to 24 months, we'll likely see inflation stick around because of the geopolitical tensions. But longer term, inflation actually helps property owners. I mean, wages creep up, replacement costs for houses rise, the gap between existing homes and the cost to build new ones widens, which makes your existing stock more valuable. And as building gets more expensive, it might even see fewer developers build, right? So less supply means tighter rental markets. And when supply shrinks, rents rise, right? So even in a flat housing market, yields can improve as rents go up. So what should you do? Well, in my opinion, one, don't panic, but don't be naive either, right? We're in a volatile, politically driven world now. So my suggestion is keep your debt under control, focus on quality. So whether it's your tenants, the locations of your properties, or the build quality, buy the best you can. I mean, the properties that I've bought in the last couple of years, they're flat level sites, rectangular, great locations, walk to shops and schools, like buy the best you can in a slum. And if you've already got property, then if you can, hold on to it, right? Why discount it like crazy and sell now? If you've made it this far, I think it's worth holding on for another year or two. I mean, surely we're at or near the bottom of this slump, If you've got the cash flow and bank support, you could even buy, but who knows? I don't have a crystal ball. But I think we're in a relatively affordable window now compared to where building costs are heading. And also, look, don't try and time the cycle perfectly, right? Property is a long game. And as for speculating, flipping houses on thin margins, I think that's pretty risky in this environment. I mean, especially, if you get caught out and it doesn't sell and you've got to hold it for a lot longer than you thought, and the interest eating away at your margin. So I prefer good, solid rental stock in the right location. That's always going to do well. Outside of property, there are other things to consider. I mean, gold, for example, it's had a big run up over the last few years. Felix Zulauf thinks it's worth buying under $3,000. It's about $3,300 now, and he expects a pullback. So, you could buy into that anytime now. I mean, gold is really becoming, or it even already is, the world's reserve currency now. Central banks are pulling away from the US dollar, and they've been buying gold aggressively. If you want to own gold, you don't need to hold it physically at home. I mean, that really makes you a target, having assets at home. You can store it securely with somewhere like MyGold, or you can buy an ETF like GLD. It's the biggest gold ETF out there, and you just buy it through your brokerage account, through Sharesies or whatever. Same with silver. You can buy SLV. Bitcoin, I think you can allocate a portion to Bitcoin, but just be aware that it's going to be very volatile. It seems to be moving quite closely with tech stocks on the NASDAQ. I think Bitcoin will stick around, and over time it'll probably trend upward, but it will swing a lot, So, I mean, I wouldn't allocate really more to Bitcoin than I would to tech stocks, really. And if you're investing in shares, I still like the US. I mean, stocks are expensive at the moment. Felix Zulauf thinks we'll have a pullback in 2026. There'll be another buying opportunity. But at the moment, US stocks are still going up. European stocks have been doing well this year too. China, I just find the political risk. South America and the rest of Asia are interesting. But look, if you want to build a proper share portfolio, I strongly recommend talking to professionals. I mean, we've had great experience with Craig's. We had a simple MyStart account that we started with the kids, when they were small, and put some money in each month. And 20 years later, that's grown really, really well. There are others, Jardins, Milford Asset Management. They're solid options. But look, again, to be clear, this is not financial advice. All right, everyone's situation's different, so speak to a qualified financial advisor. So, to wrap it up, the big picture, right? We're in a messy, multipolar world. Politics are driving markets. Energy costs are likely to stay high. Inflation's likely to stick around. But property done well, I still think it's a pretty defensive asset to own. It's something that lets you sleep at night while the rest of the world argues over tariffs and trade wars and military borders. Gold and silver they're solid hedges. US stocks still have growth. Bitcoin maybe. But anyway, thank you for listening. I hope it gives you a clearer picture of what's happening out there. and how it flows back to us here in New Zealand. Thanks.